All right, hey gang. Oh, that's a lot of Raghee. All right, let's get some. There we go. There we go. All right. Good morning, gang. Good morning. Forgot to capture the charts. So you got great big Godzilla-sized Raghee. Let's see here. I'm waiting for the essentials room to capture audio, which is taking a year and a day for whatever reason. Yeah, bot. I know I'm not. It's just loading and loading. And there we go. It's been a little slow. There we go. All right. So welcome, gang, to Charts and Coffee. Hope everyone's doing well. Full disclosure, I already drank my coffee, but I am going to have a root today, which apparently is really good for my eyesight. Blue ginger, guarana, amla, shiitake mushroom. All right, that's what's going down today when I start the day trading in the Sector Secrets Mastery and in the futures room. All right, so let's get to it. Yeah, bot, if you want to reset the audio over there, that'd be cool. I appreciate it. Okay, so let's get to it. As always, gang, thank you for being here. Thanks for your questions. We are going to start our pregame show. It's about 28 minutes before the bell rings. And so let's start off with what it is we're going to be dealing with as we start the day. And that's going to start with the economic calendar. So 2 economic calendars this time of year. First of all, what do we have on tap in the U.S. markets as far as scheduled high impact data is concerned, aka the hot zone? So we have a quirky one this morning at 9:45. We've got the flash manufacturing PMI and flash services PMI. Now, PMIs would fall into the category of more of an inflation type release. So when you think about the 2 macroeconomic pillars that the Federal Reserve is making their decisions based upon. And hang on, gang. Sorry about that. I'm just trying to make sure I got audio in the essentials room, which doesn't seem to be working. All right. It dropped? Okay. All right, let me just give that one more try over there. I hate for our simpler essentials folks to miss charts and coffee. But so when we think about these high impact economic data releases, not everything is a hot zone, right? Not every single data release is something we have to be concerned about. The ones that the Federal Reserve is watching, things that would fall into the category of the employment picture or the inflation outlook, would definitely be where we need to focus. So again, sorry about the looking away. Let me just get there we go. Allow, and let's try this one more time. And then we should be good to go. All right. So when we are looking at today, 9:45 quirky time. Now, this is going to affect the opening or clearing range in a weird way because typically we have 8:30 a.m. hot zones or we have a 10 a.m. hot zone. So keep an eye on that. Does the Richmond Manufacturing Index make a big impact? Probably not when it's on the heels of the flash manufacturing. Now, I said there'd be 2 calendars we need to keep an eye on. All right, so take a peek here. So I'm going to jump on over to Estimize. Estimize is my preferred calendar. There's a free version of Estimize. I highly recommend it because what you can do is you can curate well ahead of time. Now, again, knowing what earnings are coming out tomorrow or this week is not enough advance notice. It depends on your strategy, of course, but the way that I look at earnings, it's about a 4 to 6 week window. My preferred, so when I look back on the way in which I traded the circumstances, the environment around earnings, my best trades came as I saw the ramp up or ramp down, if you will, into the release, not the release itself, not that binary volatility hot zone event, but rather the way in which traders would buy the rumor, sell the news, or sell the news, buy the rumor, however you want to look at it, depending on whether it's bullish or bearish. But the most important thing is I can look out, today, tomorrow, that's old news. I want to scroll out to what's coming 2 weeks from now, 3 weeks from now. This list is one that I can go about curating. What I mean by that is if I know what the high concentration weighted stocks are, so take a look. Here's Apple. Do I want to follow Apple? Absolutely, because Apple is going to be one of those stocks that has high impact in the indices as well as the sector that it is residing in. Same with Microsoft. So it's a very finite list of names because it really, in a high concentration weighted world that extends to earnings, I'm looking at maybe the top 10 stocks in each index and each high concentration weighted sector. I don't need to know about all the earnings, right? And I'll just have the ones that I need to keep an eye on. And then here's the cool thing. If I keep scrolling, I can actually start thinking about the release dates for Q1. Well, the earnings we'll get in Q1, which are the Q4 earnings. I can actually start to look at that and prepare for that well in advance. So I like this kind of advanced look, and that's what Estimize gives me. That's why I like it, right? I don't know the folks at Estimize anymore, but I do love the service. Okay, so that is something that, and by the way, they also have the same kind of way you can prepare for economic data releases. But you'll notice I'll use things like Forex Factory or Trading Economics. Find calendars that suit you. This is what suits me, Estimize, Trading Economics, Forex Factory, but make sure your morning preparation is rooted in at least knowing what kind of events are going to happen today. All right. So speaking of today, let's get to it. Let's bring up, as always, the best part of our show, which are the questions. And let's see what we've got here. First up, and by the way, gang, those of you that might be having issues, again, I don't know what the issue is with the audio, and my apologies. You can catch me over on the Simpler Trading YouTube page if you like for the show. All right, you can catch a show over there as well. All right, first up is Gideon, who asks, thank you for great insight and guidance. My pleasure and my job. Thank you, Gideon. When day trading, what expiration date do I like to use when trading options? How do I optimize this? So Gideon, it depends on what we're optimizing for, right? So even though I don't write premium, my preference is for directional calls and puts. Now, I know everyone wants to say direction calls and puts, you can't win. That's just categorically wrong. That just means they can't win. And hey, bot, it's got to be my system because everything is really slow this morning. So after the show, hey, bot, after the show, I'm going to restart my system because everything is just molasses slow on my end. Sorry, gang. It's got to be me. I thought it was let me see what my speed's doing here. It's not me? Okay. Because I checked my speed this morning. I'm humming along here. But I'll probably need to reboot. Yeah, okay. Internet's good. It might be the PC. Sorry, gang. All right. Anyway. And I realize how frustrating technical issues can be. So thank you for your patience. I do appreciate it. All right. The idea of directional calls and puts when day trading comes from two things. So Gideon, what am I optimizing for? I'm optimizing for speed of putting on the trade. Not that we're in and out constantly. That's not my style. I want about 2 to 4 entries per morning. And by morning, I mean, I want about 2 to 4 trades by the time I get to 10:35 Eastern, right? So in the first 65 minutes of the morning, I want to put on those 2 to 4 trades. I'm going to have about 4 to 6 setups. And this is on average. All right. So the next thing is, what am I optimizing for? Well, speed is one of them. I don't want to be bogged down with multi-leg strategies because that's going to take time, right? And day trading is usually a short-term time frame, for me, a 5-minute. And then at that point, I'm making decisions based on 5-minute slices of psychology. All right. The next thing I'm going to optimize for is pattern day trading rule, right? I'm so happy that people love trading spreads on SPX and whatever else. and butterflies and verticals, and that's awesome. But remember, those need margin accounts, and margin accounts, unless you have the required amount in your account, are going to be subject to the pattern day trading rule. And a lot of folks say, Rog, I can't day trade options because I don't have the required capital in the margin account. Here's a really great way to circumvent that problem. And that's what we focus on in the Sector Secrets Mastery Room. Cash account, no problem with PDT. So whoosh, there goes PDT problem. So what am I optimizing for? So to answer your question, the next thing we're optimizing for is scalability. So those are my top three. Okay. The third is scalability, which really is the most important. Scalability is being able to buy multiple contracts of an option. Let's go back to why people use spreads, because usually they're trading extremely expensive options that need a cost offset, right? Or instead of going with the directional debit because of cost, they turn it into a credit because that way it reduces cost. But remember, now it's subject to pattern day trading rule. That's a problem. Because if anytime I look at my week and say I'm going to be limited to how many opportunities I can take that day, that's a problem for me anyway. So the last thing is scalability, which is really the most important thing. Save the best for last, right? That means that the option is inexpensive enough for a small account. Not that I optimize for small account sizes. I optimize for scalability, which means when I'm in the Sector Secrets Mastery Room, we have folks with very small accounts. Hey, I was there once upon a time too. Little known secret, my very, very, very first account, I was a teenager, trading futures, was $1,200. All right, now this is back in 1980. Well, long time ago. Anyway, so I had a small account, and so I had to think about which contracts I could even trade. Hence my love of grains and things like cocoa, volatility, and low margin accounts. I had to optimize for that once upon a time. If I optimize for low cost options, typically $500 to $700 or less, and most often in the 2 to 300, 1 to 300 window in high liquid names, some of our traders take 2 options. I might take 42 options, right? So the scalability and the liquidity allows for any size account to take advantage of the move. That's the scalability optimization. So expiration date is part of cost. I'm not going to pay for time I don't need. So I guess what I'm trying to say is, and you ask a great question. It's a great big question, Gideon, that I think a lot of people could benefit from. What are you optimizing for? That's what I'm optimizing for. And so the time to expiration is part of cost, which is part of the scalability thing. And therefore, I don't want to pay for a lot of time because I'm usually, for example, yesterday I have DIA up and IWM up. We had 2 great trades on both of these yesterday. They were quick one day. We were hoping they might be swings. They still may be, but we had 2 great trades. One in terms of shorting Russell via the IWM puts, one in terms of shorting the Dow via DIA puts, right? And they're very low cost. We were able to hit our initial targets, move to break even, and then see what happens next. And some traders might have taken 2. I took a lot more than that, but that's where the scalability, and I don't need a lot of time to expiration, even with overnight exposure. These were about, what were these? November 11 expiration. I'm trying to remember here. I can tell you right now. These were November 3 expiration. I'm making up days now. Okay. So Gideon, awesome question. I love the question. Richard asked, what about coin today? All right. So let's see what we have here. It's a very choppy environment. Yeah. I'll tell you what, Richard, thanks for the question. I don't really have any skin in the game in coin. I couldn't even tell you the last time I did. Just looking at the daily time frame, though, tells me this is an ideal symbol for probably day trading or perhaps 1 hour short-term swings. But when I look at the structure, probably not something I'm going to have a lot of edge in, right? Based on the way I like to look at follow through, which is giving trends preferential treatment. All right, Rainy Days, sticking with just calls and puts has been huge for my cash account. That's awesome, Rainy Days. Again, I think there's just this common narrative out there, which is just, it's really a dumb thing to say. It's as bad for me to say that no one can make money trading, collecting credit as bad as someone says no one can make money buying calls and puts, and yet the latter is repeated nauseously often. It's not true. It just means they can't. Everything relies on timing. And if you're getting that timing right, rainy days, very nice, very nice. And congratulations. That's awesome. All right. Next up, GJ asks, with my day trading, when I reach my T2 target, do I usually have 50% gain on my premium purchase? GJ, I do not optimize for that, because that would mean, and again, I apologize for the way in which my charts are loading. That would mean that my targets are using premium value as a deciding factor, which I do not. If I were trading the underlying, GJ, let's say I'm playing the DIA ETF shares as opposed to the puts, the way that I would exit the shares would very likely be based on support and resistance. And yet, when we go to options, traders start to look at all these other things, Greeks and this and that. Aren't we simply just using an alternative vehicle as a replacement for the shares? So the same thing would apply to options and futures contracts. Aren't I just using a derivative of the thing, right? So if I'm trading NQ futures, but I decide to trade NQ futures options, I'm just trading a derivative of that thing. That means the underlying thing, the NASDAQ futures, the QQQ ETF, Apple stock, that's still where I'm making my decision. So there's this misguided notion that the value of the premium should be the target. No, the targets and the obstacles on the chart itself, the very thing that likely got us in the trade to begin with, some sort of pattern, whether that be technical, volume, volatility, time, some sort of pattern on the chart got me in. Some sort of pattern on the chart is going to get me out. All right. That's always the goal. Right. And I think that somehow or other, because we have more information in options, whether that be the Greeks or whatever, we start to obscure the fact that we got into the trade based on the notion that price action did something. And that's also going to be the reason I get out. And that's the way I guide traders in the mastery. And it just works really well. I know where support and resistance are. That's going to be the goal. But as far as premium return, GJ, sometimes that is going to be, what did we do yesterday? Bought in terms of, I'm trying to remember what our first target was yesterday. I will say also, GJ, and here's why I really don't have an answer for your question. I don't like percentages. GJ, I don't like percentages. And here's why. When I talk to my members, I talk in dollars per contract and points per contract. And you know why people don't? Because percentages are sort of, they sound good. I made 50%, 100%, 30%. What does that mean? How many dollars, how many points per contract did you make? So I'll give you an example. One of our trades yesterday made 70 cents per contract. I don't know what a percentage was, because you know why? I don't pay my power bill in percentages. I pay them in dollars, right? And dollars map to what are the number of points or cents that I made per trade. So I don't really even think in percentages, because let's look at it this way. If I bought a 50-cent option and it went to 75 cents, 50% return. No, it was $25, right? So I don't like to think in percentages. Even when I break down my trades viz, yeah, I might have made X percent that month, but I want to show you the dollars. I want to show you the points. People don't like to do that because there's a lot of things you can obfuscate when you use percentages. And I don't like to do that. I want to let you all know this is what I made per contract. Now, everyone else can say, Rag, I had 2 contracts and I made $140 on that 70-cent move, right? Rag, I had 22 contracts and I made 22 times, right, the $70. And that's the way I like to look at it. So I often don't even consider the percentages, GJ. I think it doesn't map to anything. That keeps the lights on around here. So thank you for your question, though. All right. Toss has a delay. Yeah, it's just kind of weird. Okay, I thought it was me, but all my websites are loading fast. I usually try to assume it's me first, and so I'll just go to fast.com and just make sure that it's a little slow. Okay. Nope, there it goes. Okay, we're good. So yeah, I always try to make sure it's not me. Okay, I appreciate it. All right, gang. And just like that, I'm out of time. Great questions today, gang. Absolutely. Great questions today. And I will see you all tomorrow. And I will we'll take a look at what's going on as we go into tomorrow's hot zones. Are going to be some pretty big ones. Heads up, we got Bank of Canada tomorrow, but we'll run through that when I see you at 9 a.m. As always, gang, thanks for being here. Thanks for the questions. Thanks for loving trading. And I'll see you tomorrow, same time, same station.